Hi and welcome back. We are going to go over the My Tools area today. Um, that is within your My TCI area on the Creative Investor. Whenever you log in, you will see Welcome to the Creative Investor. Under your My TCI area, you will see all your icons listed here. And today we're going to focus on My Tools. So just click on My Tools. And up will come the Tools main page. And the tool that we're focusing on today is the ProForma-nator. Just click on that, and that'll bring you here to the ProForma-nator. The ProForma-nator will help you decide whether your real estate investment is either worthwhile or something that you need to pass on. Please fill out the information below and then click Submit. Once the tool calculates the debt coverage ratio, you can then print it out and give it directly to your banker to get the loan. So let's get started. Here we want to put in the appraisal value. My appraisal value for my house that I'm considering is $100,000, and I'm going to purchase it at $40,000. My repair costs are an average of about $1,200. I've got to do some paint touch-ups, some minor carpentry repairs, and that should be it. The closing costs are $3,200 here. And my interest rate, I'm going to put a 7.5. The rates have gone down somewhat, and for 30 years. And basically for this repair costs and closing costs, those are whenever you want to include those in your mortgage. So if you don't want to include those in the mortgage, you can just leave that blank. And your monthly rent, I'm going to put in $700 for this house I'm considering. And let me also remind you that the ProForma-nator is for those of you who want to buy and hold properties, basically like landlords, property managers. It's a long-term investment. This is not for flips. So just wanted to make you aware of that. So again, my rent is $700, and the vacancy rate, basically what that is how often you are going to have to fill the property, how often it's going to be vacant. So on average, I would say our tenants reside in a property for about 4 years on average. Even though we do a 1-year lease, they're about there for 4 years. And of that, it takes about 4 weeks to advertise and get our property rented out. So 4 weeks out of 4 years comes up to 1 week vacancy rate. You can do a percentage per week, or you can do the per weeks, but you just fill that out. Then in the maintenance rate, you can do a percentage there, or you can do per month, and I'm going to put $50 per month to do some landscaping, some repairs that are needed. Your monthly association dues, this is for like homeowner dues, subdivisions have dues sometimes. The particular house that I'm talking of was built in the 70s and never had an association, so I'm just going to put 0 there. My property taxes are $800. Hazard is about $500. Of course, these rates will vary in your area. And for advertising, just like I talked about with the vacancy rate, you base this on how often, if I'm going to have a tenant for 4 years, I'm not going to have to advertise every year. I might just have to advertise that 1 month to get them to fill that. So on average, my advertising rates are $200 a month to advertise in my local newspaper. So 200 divided by 4 years is $50 a year. The water and sewer, the tenant will pay that, so that'll be 0 on my part, 0 on electricity, 0 on gas, because they will also pay that. Most people have cell phones now, so that's a 0 there. Trash is 0. For management fees, though, this system here with ProForma-nator has put in a 10% default. So 10% of your monthly rent will go towards management fees unless you want to specify a dollar amount. So the dollar amount is per year. So if you want to pay yourself $5, you put in that. If you want to pay yourself $100 a year, you put in that. If you want to keep the standard 10%, just leave it blank and it'll go ahead and calculate that. That's also for the same for the reserves. We have a 5% default within the system. So once you've filled this out to your best of ability, and not been too conservative with this form, because if you're too conservative, you probably won't see any profit. But just put it as best as you can and then click on the calculate button. And we're going to find out if this is a good deal or deal to pass on. All right, there it is. It says a whole lot of cash. This is a keeper, and it has a green check there. It took into the account of all the information we put in on those fields, and it's come up with our principal amount that we had financed was $44,400 at 8%, 30 years amortized, and it's showing that our monthly payments will be about $310.45. And then for the year, we'll be spending about $37.25.41 on those mortgages. Our net operating income for the year is $5,028. That is more than the debt service for the year, so that's why our debt coverage ratio is 1.35, and that's why this says a whole lot of cash. So if this was not a good deal, if your net operating income was lower than your debt service, meaning that you were not making any money during that year, then you would see X's, red X's down here. Okay, if we go back, then we're going to find out if I can show you those red X's. Let's say we want to change the same property and say, oh, gee, I can only get $500 a month for the rent. And we click calculate. We're going to see if those numbers work still or if they're not. Oops, nope. It says, do not purchase this property. This property is not going to make any money for you whatsoever. And there are the 3 big strikes, you're out. So that just goes to show you that sometimes these calculations do not show that you're going to have a good property, a good investment, and some are. So that ends this tutorial. We hope you have fun playing around with this calculator and hope you can get some good deals out of it. Thanks, and have a great day.